Good morning. Welcome to Stock Market Today. It is Monday, January 25th, 2021, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where I get a lot of the content for this show. Daily stock ideas hit your inbox every trading day before the market opens. Hope everybody had a great weekend. Let's get back into it Monday morning. U.S. equities were mixed on Friday. NASDAQ Russell 2000 closed at new highs, while the S&P 500 and Dow saw moderate losses on the day. Major indices did gain for the week, and if you look at weekly charts, which we're going to do, I changed things up here a little bit today. If you look at the weeklies on a weekly basis, we have closing highs for all the major ETFs. Treasuries were mostly stronger with the curve flattening, the dollar strengthened against the yen, little changed on the euro cross. Gold finished down 50 basis points and WTI crude gave some back again, down 1.6%. And as we get to the desk this morning on a Monday morning, what do we have here? We have S&P futures up 30 basis points. And that comes on the heels of Asian equities being mostly higher overnight, led by Hong Kong and South Korea, or two areas of the market that I've been talking about in my market survival guide, continuing to do well. European equities are mostly lower this morning after starting out with some solid gains. Treasuries are mostly bid with the curve continuing to flatten. Dollar better on the euro, unched against the yen. Gold down 10 bips. WTI crude is up 70 basis points to kick us off on a Monday morning. And here's what those weekly charts look like. These charts now, I changed it up a bit. I was tired of doing the same daily charts and with the same levels. You know the levels. Actually, as a matter of fact, we bumped some up a little bit. It's for the SPY, let's call support in the 360 to 370 range for IWM. Let's call near-term support 190 to 200. For Qs, I think 300 has been solidified as an important near-term support level. So let's just leave it at that. Above 340 for the SPY, upside potential to 413. All that changed the same. So some tweaks to the levels. Nothing major, though. More like solidifying near-term support, if you will. But take a look at these. Take a look at these weekly charts. Right? All three of these, if I made the SPY a line chart, it would look the same. All three of these weekly closing highs. I know people are looking for a reason to be bearish. I've seen some people talking about waves, and this is wave 5. I don't know, maybe. Okay, maybe not, though. How do you know? The trend is up, and it's broad, right? So that's what I'm focused on. So again, your time frame matters. You know, maybe people who are focused on short-term indicators might recognize the fact that we're a little bit overbought in risk assets in the near term. But I think bigger picture, that's an uptrend. It's an uptrend across, and it's broad. It's an across the board uptrend. Right? Just go back through time, 18, 19, where there was a solid uptrend in the SPY and a solid uptrend in the Qs. All the while, remember, here's what I was talking about. All the while, IWM was just going sideways. That was not broad. This was your fan mag leading. Right? This was, there's only 5 or 6 stocks dragging the entire market higher. That's what 18 and 19 were. Because the entire market was not going higher. Only the Qs and the SPY were. IWM just broke out. And I can substitute IWM here for almost any major market ETF around the globe. And it looks the same. 2018 to 2020 was a bear market for equities. If you looked anywhere other than where the largest tech and consumer-facing tech names were housed, which is SPY and Q. It was a bear market. So I know it's fashionable to call things a bubble. I'm still in the camp that the cyclical bull it has just started. How long it lasts, don't know. I think this is the start of a cyclical bull within a secular bull that's been in place since 2009. That's my view. Let's take a look at our market in a minute now. What are we writing about today? Well, record closes for the major averages. Our bullish view continues to play out. You can't argue with it. We've been right. Risk assets are overbought in the near term as havens trade near oversold levels. Take a look in Chaikin Analytics if you're taking the trial, or if you're a client. You totally should be taking the trial for getting more in-depth views on what I'm talking about here. In particular, I know it's fashionable right now to shoot for high short interest stocks. So I've come up with a way to kind of look at that through the Chaikin lens, right? Give me the stocks that have high short interest, but a bullish or very bullish power gauge rating at Chaikin Analytics with strong money flow and strong relative strength. Those kind of pillars that we use to look for ideas. Let's just combine them. I did that in my note today. And if you're a client, you'll see it. And if you're taking the trial, you'll see it. As I said, futures point to a higher open. Let's look at the major indices from a power bar perspective. I got a little sidetracked here. We're going to run through it. The Dow down 60 basis points, 9-3. S&P down 37 bips, 139.58. You can see it on the screen. I'm not going to go through them here. Small caps outperformed, bonds upticked. Wouldn't be surprised to see treasuries catch a little bit of a bid here in the near term. They're oversold. Same with gold, actually. We'll look at gold, GLD, a little bit later on in the show. But I think the big story last week was the reemergence of mega cap growth. Whether it sticks or not remains to be seen, but they lifted their head. Netflix, Google, Apple, they lifted their heads last week. The question is, are they getting up off the mat now? If they're getting off the mat, think about what that means. The S&P, the NAS, the Qs, they've grinded higher without the help of the generals. The generals have been on their backs since September. What happens if the generals ride up to lead the army again? Could be pretty interesting. Something I'm watching closely. Stock of the day, Sinclair, SBGI. This is an interesting setup here. Big cup and handle if that's what you're into. All right, we're up here near the 52-week highs. Here's our cup. Here's our handle. A couple different ways to think about it. We are oversold, so it looks compelling by my process. SBGI has a bullish rating. Strong trend, strong industry group. Bullish money flow, oversold, outperforming, right? The typical kind of cup and handle strategy is to wait for it to take out the high in the handle. So maybe, you're waiting for a breakout, but understand you could be, it's a different strokes for different folks. Everybody has a different way of looking at the markets. I don't mind either in this case. A lot of the ways that I've been thinking about getting into positions lately is, starters. Kind of saying to myself, what's my max position? What's core? Core is some percentage of my portfolio. And then my starter is some percentage smaller than core, right? With the goal ultimately of getting it to a core position. And then maybe you're overweight and underweight to that core position over time, using trend, using risk management, using, the tools that we talk about each and every day. But SBGI looks kind of interesting to me. Let's take a look at our sector tracker now, moving to the last 5 days. Like I said, when names like Google and Netflix start lifting their head, that's going to help comm services. 5.4% over the past 5 days. Tech, discretionary. That's your alpha. These are your alpha generating groups here. Healthcare as well. The only one that's up over the past 5 days that's not an alpha generator is real estate. Utes, middle of the road, industrial staples, materials, energies, fin. So last week, I guess if you wanted to attach a theme to last week, it was mega cap growth lifting their head while the cyclicals took a break. Let's see how it plays out. It's interesting. Jives with what I've been saying in my notes, which is to take a balanced approach. Don't shun one area of the market for another. Stay balanced. Cyclicals start to fade, but growth coming on. If you have a balanced portfolio, you've been able to take advantage of that. Industry and focus, software services. Software is eating the world. I am a believer in that long-term thesis from Andreessen Horowitz. Over the past 6 months, software and services has outperformed by 23%. Power bar ratio 45-11 is very strong, ranked 14 of 21 subsectors. CACI, very bullish. Leidos, LDOS, very bullish. And Science Applications, SAIC, very bullish. All three holdings of a fund that, if you were going to describe a textbook uptrend since March, that is it. higher highs, higher lows, steadily grinding higher. I mean, if we were going to make any kind of complaint here at all, it would be that we're somewhat extended above the moving average. We're overbought. Money flows mixed, okay, but predominantly bullish, right? We want to see persistency, and that's what we have. So we have a bullish fund in a strong trend that's outperforming the market, simply overbought in the near term. But if you're looking for ideas, you've got to be looking at software. Quickly now, Friday's gainers and losers. For those of you who read my market survival guide, you should recognize SIVB. It's an open ID up 5% plus following earnings. FANG, nothing new. INSEE got priority review for one of their drugs. PMH, Janney initiated with a buy, no news on ABC. Loser side of the board, IBM. Can't get fired for IBM. If you're a portfolio manager, you can, down 10%. Intel earnings down 10%. ISRG, excuse me, earnings down 10%. Seagate earnings, take that stock down 4% and take Western Digital along for the ride. Let's dig into the charts. A little behind here today on my schedule, but that's okay. A lot to say. It's Monday morning. Let's take a look at GLD. GLD is fascinating to me. Now, I soured on GLD down here somewhere, and I got a lot of pushback for it. I soured on it down here. Got a ton of pushback for it. Look at the scooter, though. The scooter was rolling over, so I didn't call the top. I wish I could have called the top. I didn't. I don't even try. But there was evidence that the trend was rolling over, and look at the scooter. So I turned sour on gold here. And if anybody who followed along, right, look at the massive underperformance. If you stuck with gold, it was a drag on your portfolio since I soured on it. No two ways about it. It's just math. And it was a drag, right? It was, your money could have done better for you somewhere else. Great. Now, however, I see this nice pullback. We're at the 200-day, we're at the 50-day, they're pinching. If gold's going to make a move, I have no idea what's going to happen. But if GLD is going to make a move, it has to do it from here. And I think what we're looking for would be a break of kind of the 180 to 182 half area to lead us to believe that this consolidation is over and we're now going to start working top side again. We're not there yet. It's anybody's guess. We could just as easily break down. I'm not going to try to guess at it. I'm going to wait for the trend to develop. RSI, middle of the range. Scooter sitting on the bottom of the chart tells you everything you need to know on the relative. Let's look about rates. 10-year continuing to grind higher. TNX here, the 10-year yield above its 50-day, above its 200-day, both of which working higher. Just kind of working off a little bit of an overbought condition on the RSI. Take a look at the RSI. This is the RSI of the yield. That yield's over 1%. We're talking about that like it's a good thing. But considering where we were back in March and August, I mean, what was this? Was this a double bottom at 50 basis points and now working higher? Pattern folk. I'm not huge into patterns. They're way too subjective for me. People love them, but I don't. But I recognize that people pay attention to them. And if you wanted to, I guess you'd probably call this a descending triangle that then broke top side, but it's a double bottom. And it argues for higher rates. Let's start talking about what that means, where it's playing out, who it's helping, right? It's all the tailwinds, all the broadening out of participation, the value trade, financials. That all stems from this. Read my note on Friday, the copper gold ratio. If you were following the copper gold ratio, you've been positioned properly for this market. Finally, commodities. This is interesting now because commodities, we've been bullish and we've gotten above a key level, but there is a ton of wood to chop now in here. So while I remain bullish, I believe in the theme. We're above the 200-day. CRB, the commodity index, overbought here in the near term and trading into a ton of resistance. So I think that if you're in the trade, if you've been following along, drill down, right? Ags, base metals, things like that have been solid. But pay attention here as we trade into congestion. That'll wrap us up. I mentioned the trial. Take it. I'll be back tomorrow.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.